Welcome to Profiletraders. This is Reza and you're listening to my market analysis for January the 9th. We are looking at a chart of ES here, and what we are looking at is two sessions now. Last night and today all contained inside Friday's range. Obviously, when you start to get multiple sessions inside another, it's a sign of tight market, low participation, and a market that is in a stage of pause, deciding what it wants to do next. If you recall, in the last report I told you what's very important is that once we do reach 2274, the break to the upside upon making a new record high should be very dynamic and very aggressive. And what we noticed and what we saw is that once we broke above the 2274, we could not bring in any enthusiasm on the upside to make the market push directionally into new all-time high. As a result, now we are seeing a bit of a pullback, but the pullback is also done with a lack of conviction and a lack of enthusiasm. So basically we are stuck. Can go up from here, can come down from here. And if we go look at our daily chart, which I am fearing the most, is that we start to develop a pattern as we did the last time we were trying to make all-time high, where we got stuck into these tiny bitty low range candles for weeks after weeks after weeks. And it seems like more or less so far the same pattern is developing here. It's been now several weeks in a row where a vast majority of trading days are kind of non-eventful in compared to the market condition that we had in the past. So now, obviously, for anything to happen on the upside, it is very important that we go break this new recent all-time high of 2277. If we continue to drag and not be able to do so, the first level that we need to break in order to jumpstart a down move is 2258. Once we break that, we should come and test the low here of 2254, and if this breaks, then we are going to come most likely for a touch of 2244, which is going to be a very important long-term support area upon which broken market should start to see a very aggressive push to the downside. Now this sideways condition could continue all the way into next week, because next week will be the start of earnings season, and it is very possible that market will wait for these earnings to be released so that they can see how the corporations did during the last quarter. And as well, we are going to have the presidential inauguration, and once Trump is sworn in, we are going to see very much so what he's planning to do in the very short term with regulations, taxes, etc. etc. So very possible that with all this coming, that market will go into sleep, and unfortunately for us, we will have to deal with very mediocre session, for example the one like from today. But keep an eye on 58 for a breakdown and 77 for a break up. Until we remain within this range, we are just gonna rotate, and it's gonna be non-eventful and very tight range trading. Now for crude, if you recall, once we had this big drop towards the beginning of the year. I told you that the money has exited out of the crude market and that we are going to see bearishness and continuation to the downside. However, because the range was so deep on the way down, that the retracement was a little bit stronger than what I expected. But during the last report I told you that 54.20 was significant resistance, that's the level at the very last that we were allowed to see it violated. And if we were going to violate past 54.20 aggressively, I was expecting that we would go challenge the high of this big down session, but we did stop at 54.20, and now the result is from that point on, in 3 sessions we deleted all the gain that we had on the retracement against the big leg down here, and now we are making a new low, because obviously we did take the low of that session at 52.05, 52.06. Now what to expect from here? From here, because we have now dropped 2.30 from the high of 54.20, it's very possible that because of an oversold condition that we are going to get a bounce up. To me, the first level of real resistance, because of the drop being so deep, is going to be 53. I can definitely see price bouncing back up to 53. So 53 to 53.30 is my main level of resistance. Minor resistance comes in at 52.40, and then on the way down, if we are not going to see a bounce coming in, and if the sell-off continues the way it is right now, there is absolutely no support before 51. 51 is critical support. If we do break 51, oil could be in trouble, and from a daily point of view, we could very well go and then challenge these 2 big candles up. So below 51 we should be then looking at 50, and if 50 breaks, we could drop literally fast and furious towards 48 to the downside. So far, based on the way it closed today, it's looking very bearish, but because it's now a bit oversold, we could see a sharp retracement back up. But once we get towards 53 to 53.30, I could definitely see the sellers coming in and try to push this thing back to today's low. And if we continue to remain below 52.4, then 51 is the next target down, and past that 50. Thank you for listening. This was Reza with Profiletraders. If you wish to learn market profile, check my website. You get all my 5 courses, 1 year to my trading room, risk-free, 30 days money back guarantees for a fee of $550. And you also can have a 2 days trial to the trading room. Good trading and good luck to everybody tomorrow.